For TraderInsight.com, I'm Adrian Manns. Let's go over what happened today in that first hour trading pit. So this was a busy morning, right? And from the start, it was evident that it was going to be really important to be diversified in these strategies. And the cool thing is, more than just a couple of you mentioned to me, wow, I took a stop on this, I took a stop on that, right? A couple of the trades from the Around the Horn plan, but boy howdy did the XRVs and the Baltimore chops and those Apple trades make up for it. So let's go through them round robin and let's just dig right into what happened this morning. Why don't we start with XRV? Now, we had 4 XRVs on the trading plan this morning. They managed to keep us plenty busy. The important thing with these, I think, is to pre-program them and know when you're going to allow them to trade through the open and know when you're going to go and defer the orders. We had an inline open today. What's that mean? Comes in flat, right? Market came in pretty much where it went out yesterday, didn't have a big gap. In my case, I use a sort of a weird litmus test. I do about a 160-point gap on the Dow. If there's 160 points or more, I just arbitrarily go through and defer these things, especially if the gap is going to be in the direction of the trade, because I don't want to get pulled into a trade and then have the possibility of stopping out because the market makes a quick reversal first thing in the morning. So today that was not the case. Inline open, got right down to business. Let's take a look at how these played out. Very first stock this morning, AERI, Aerie Pharmaceuticals Incorporated. This one triggered right out of the gate. Pretty much a no-brainer as far as the entry goes, but once we had a 27.87 move that got us into this, where did you put your stops? This is the ongoing question that everybody's got. I think it's a good one, so let's just focus on these every day. I had an area right up here, about $28.20 that I was looking for a test. Since that first bar didn't break up through there, I quickly pulled down this higher stop that I had at $28.59. So bring those stops in once you see that the price action is holding below the stop or above the stop in the case of a short, and you're good to go. This one, 27.87 down to 27.03 in the first 20 minutes of trading. That was a very good thing. Next one on the list, Chemours, ticker symbol CC. This one looked worse than it is on this first bar, right? It was easier to get into this trade than you might think because it looks like it just dropped out of the gate and didn't give you any opportunity at all. If you had your order out there and you were allowing for that initial slippage, we were good to go. 22.45 was the go line on this one. And if you were looking for a stop, remember the exchange that it trades on, $22.83. We had every reason to expect that that was going to be a very inelastic level given that it's an NYSE traded security. And once again, 22.45 down to 21.75. This one was off to the races. First bar of trading. You probably heard it in the room. Order filled, order filled. That's because we made the move from the entry right down to the profit objective in no time flat. Next one on the list, RARX. This is more a question of where would you have put your stop loss. I initially had it down about $32.56, $32.55, somewhere in there. I'd want to be able to pull it up into this area, 32.87, as quickly as possible, obviously, if I got into the trade. We didn't get in because it never got up and retested these highs. The way to validate one of these stops is to then see where is the early bounce in the morning. And in this case, there really was no bounce, so no trade. But you'd want to make sure that you gave it enough room to swing in that range so that if it already tested one of those two lines, you allowed for another test. And in this case, we would have even had to give it a little bit more room because of the move down into the range that the stock did prior to doing nothing on the session. So that was RARX. The next one on the list, XNCR, and this was another good one. So this was a long side entry. We had a move up above about $44.04. That was getting us into the trade. 45.04 was the profit objective. And then obviously in this case, your stop loss got to be down there about $42.62 initially. So it's pretty wide. And that's because going into the close yesterday, you had this happen, this big move to the upside. Not not anybody's favorite thing to deal with, but initially you've got to leave that stop wide, and you had every expectancy that you're going to be able to move the stop up in the morning, and in fact that was the case, as we had a 43.46 stop based on the initial price action on the stock. So real clean, nice trades on the XRVs. and boy, they put away some profits this morning. Next, we had the scalp setups in Apple. First one that I took this morning was on the violation of this 201.59 line. We had a very tight pre-market, and I really wanted to see whether or not we could get some directional bias going out after the first couple minutes of trading. Got very clean movement up through that 201.59 level. You could have also focused on 201.22, but 201.59 up to 93 in the central pivot at 202.23. That was a real clean move that was easy to grab onto. Some of you were looking to short side this thing. Didn't really have that feel this morning as we got into the open, and it was pretty evident that it was going to drift higher as the day went on. I didn't expect to see these big bars form the way they did, but once they were in, the next thing that I was looking for was the reversion move down to the pivot line. This one we called live in the room as it traded. So we had this move higher, this move lower. Did this, real nice clean bottom there at the pivot. So a move back up through there gave you the opportunity to go then and capitalize on this move back up into the range. And 202.79 was, I believe, the target area on that. That was based on all this price activity that happened back in yesterday's trading, and it made for a really solid morning on Apple. And finally, we had a nice group of gaps. The gap trades this morning, 2 standard deviation reversion trades, were pretty straightforward because we had these nice pullback entries on these. So ADP, this is the first one that we looked at in the morning, looked pretty exciting, as if it was going to give us an early entry. Might have been the case that Rick took it off the low of that first bar and caught some of the drift back up into the range. But the reality was it was this 159.51 level that was a nice entry, and then 160.27 on the target based on that earlier price activity and a lot of the volume by price that we saw out on the right side of the chart. So ADP, real nice trade on the morning. If you didn't manage to grab it, or if you don't understand how to get them quick enough, go work on that simulator and make sure that you get your chops up if you're going to trade the Baltimore chop. Next one's AYI, Acuity Brands. This one was a no-brainer, 1, 2, 3, 4 entry. Fifth bar gets you in, tracked right up through the high of the prior bar. The opening tick was the target on this one right there. This made a nice move up to the target, made a little bit of a reversion back up into the range, but all in all, 121.99 up to 127.98. That's a big move. I know some of you were targeting the lower part of the range on that one. Nothing wrong with that either. So we had quite a few people who said they were looking at this level right there, 125.86, or maybe a little bit lower. Ain't nothing to complain about there. That was still a very, very logical target. You can see that the stock did in fact pause right where you expected it to. And if you're putting these pieces of the puzzle together every day, the most important thing is that you treat this like a trading plan. Plan your trade, trade the plan afterwards. There's nothing to worry about. No coulda, woulda, shoulda ever if you're trading your plan. Next one on our list, Greenbrier GBX. So this was too narrow for me. This is why I didn't look at it in the pit. You had this 27.53 level, and you really only could expect it to go to 27.78. I don't like to treat these opening gaps as scalps. So if there's not enough room for a substantial profit, I like to move on to the next one. So that's why I avoided that one. A couple people asked, wasn't that a clean setup? It was, it just didn't have the range to go do what we needed it to do. Then we had Blackline Incorporated, ticker symbol BL. Look at this one. We went from 47.60 actually on the entry, right up to $48.79. There is nothing there that shouldn't be obvious to you in terms of what happened if you paid attention to what you were looking at in the 2SD opening gap. Of course, that's exactly the way that we expect these to play out. So if you had a problem with it at all, it was that these highs here, you know, they looked a little bit tight with that entry, and you know, we might have seen a little bit of a bounce there, but we talked about that in the room and we were expecting that it might happen. Didn't really come to pass. Made that move right up to the profit objective. Real good day. Last one some people were looking at was AMRN I wasn't interested in this right from the get-go for a couple of reasons. You always want to see, how close a pivot line is to that gap. So the fact that this one was 2SD was not very impressive to me at all, given the fact that it only gapped up enough to get out to R2. So that really didn't make a whole lot of sense. Those support and resistance bands are too tight. The profit on the stock was very, very limited. So if you would have had a gap on this one that was going to fill, really the most you were going to expect was a move from the entry down to about 2011 before you caught a bounce, and then you have the issue of, well, where's my stop? Is it going to take me right back out again? It would have been a better trade just waiting for it to drift back down into that 2011 pivot, wait and see if it comes down below, and then trade it down to that 1967 pivot. But that's not what the Baltimore Chop's all about, so we didn't do it. And all in all, Baltimore Chop for the morning worked out really great. So there you have it, July 2nd, 2019. Mom, if you're watching, happy birthday. For the rest of you, if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.